welcome. You're watching Business Today Television. I'm Sakshi Batra. Well, the Indian equity market has now entered the coveted $4 trillion market cap club for the first time ever. The other markets which are valued more than $4 trillion of market cap include the US, China, Japan and Hong Kong. And now India has become the next country, the fifth country in the world with an equity market cap of $4 trillion. This is a historic level that we have touched today. And of course, the Indian markets have also achieved this feat ahead of the Indian economies GDP, reaching the level of $4 trillion mark as well. In fact, we've also seen that the overall market cap of the BSE listed companies has crossed this mark of $4 trillion 2.5 years after crossing the $3 trillion mark as well. In fact, overall, the market cap of BSE listed companies had crossed the $3 trillion mark for the first time on May 24th of 2021 as well. Now, also we have seen that the exchange had also seen listed firms valuation going past the $1 trillion level back in the year 2007 on May of 28. So looks like the May factor is still working for at least 2 years. The journey from $1 trillion to $1.5 trillion was covered in 2,566 days, or just over 7 years, on June 6 of 2014. The market cap of the listed companies reached $2 trillion as of July 10, 2017, taking 1,130 days from $1.5 trillion level too. From there, it did take about 1,255 days to go past the $2.5 trillion mark as of December 16 of 2020. And the Indian markets have actually had a stellar run over the last decade, with both the Nifty and the Sensex delivering substantial returns. The Nifty delivered positive annual returns for 8 consecutive years in the last 10 years or so. When we talk about the 2023 performance for the Indian markets, BSE benchmark Sensex has rallied 5,540 points, or over 9% so far this year. The market cap of all of these listed stocks on its platform have jumped about 50.8 lakh crore in this year so far as well. Now, what we've also seen is that the market cap increase was also due to the share prices going up, as well as the listing in the form of IPOs that we have been seeing as well. This year, the outperformance clearly was from the mid and the small caps basket. We've seen both the indices from the mid cap and the small caps have delivered over 30% kind of returns this year, and this has remarkably helped the markets to achieve this feat as well. What's really helped the markets also, you can actually see on your screens with the kind of market cap that most of the countries around the world command. $47 trillion for US, China $9.7 trillion. Then we also have Japan, which is at $5.9 trillion, and Hong Kong is at $4.8 trillion, not very far from India, which is now at over $4 trillion. And we've surpassed London's LSE group, that's still at $3.4 trillion as well. Now, what we've also seen, apart from the mid and the small caps that have risen in substantial value, helping the markets to really climb up, is of course the domestic institutional investors that have poured in big money. I'll tell you all of that, but first let's look at the top stocks that have really risen by market cap. So Reliance Industries, the most valued company, is at 16.2 lakh crore rupees. TCS is the second most valued company on the stock exchanges, commanding a market cap of 12.77 lakh crore rupees. Then the third one that we have on the list is HDFC Bank, that's 11.7 lakh crore rupees. ICICI Bank has become the latest one to enter the top 5 spree and now commands a market cap of 6.5 lakh crore rupees as well. So this is as far as some of these top companies are concerned. Infosys comes next with 6.02 lakh crore rupees, and HUL, which stands at 5.9 lakh crore rupees as well in terms of the market cap that they command. But overall, like I was saying, it's been the constant support of the domestic institutional investors that has really helped the markets and the BSE listed stocks achieve this feat of $4 trillion. The FIIs have only bought Indian stocks worth about 1 lakh crore rupees in this year so far, while the domestic institutional investors have outpaced the dollar money that by pouring in 177.5 lakh crore rupees into the Indian markets. Remember, this feat also comes in on the back of a very, very volatile, a roller coaster kind of a year that we've seen in the Indian markets. You name it and we've seen it. We've seen the geopolitical tensions, both Ukraine, Russia, and of course the recently Israel-Hamas war as well. Despite the geopolitical tensions, what we've also witnessed is a very, very volatile scenario when it comes to the crude oil prices, inflation that had skyrocketed all across the world, including in India, leading to sharp increase in interest rates as well. What we've also seen is the politically changing scenarios with the upcoming state elections, and the two big general elections of both India and US are impending, and ahead of that as well, the markets have remained pretty resilient and have continued to show that India remains in a sweet spot in the overall global market scenario as well. So there you have it. $4 trillion is now a reality of the Indian stock markets. Where do we go from here? Well, bullish comments are still pouring in from all the equity markets and analysts here who still believe that in the next decade, which is now being talked about as India's decade, the Indian stock markets will have a lot of other feats to achieve as well. With that, we will wrap up this special edition for you, but do stay tuned on to Business Today TV to catch all the updates from the world of business and stock markets.